Hello, everybody. It's that time again. Late night crypto talk, Bitcoin. Brandon here from Los Angeles, California. Go ahead and type in the chat box where you're listening in from, and make sure you hit that thumbs up button as well. So we have Marty Bali from Victoria, Texas. Rohan from Atlanta. Rohan, I took a look at that video. I like it as well. Spot on. Lashana, about to get paid. Robinson from Richmond, California. Last weekend before Christmas, you guys ready? Then comes the new year. Shauna Ross, Charlotte, North Carolina. Who me? What's happening? As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Find a vehicle, take action, and remain focused. Do not get distracted. There are so many things out there that can distract you. You can only be a part of so many things. You have limited resources. And especially this time of year, there's going to be 100 things that's going to come out that could potentially distract you. Got to be wise, got to be smart about your decisions. One thing I learned is never make a permanent decision to a short-term problem. Some of you would get that. Now, following these rules is not going to guarantee you success, but it will at least limit your risk. And that, ladies and gentlemen, is the most that I can ask for. going on, Latifa, Mohammed, Elijah Morgan? A couple of interesting articles to talk about today. First I'm going to get my Bluetooth up and running. And share screen. All right, you should be able to see my screen. First thing we always do is we look at the market. What's going on? Oh, Mohammed and Skortala. Hello, hello. Cannot leave out the wife. All right. Current market. Well, let me refresh this. What is it telling us? And I have some information to share on a new strategy that I've been doing when it comes to the trading side of things. Going on, James Jones. All right. Still loading up. Okay, I see, wow, that's still there. I see Bitcoin is up 3.93%. Ripple is up 2.92%. Ethereum, 13.33%. And I'm excited about that because I did something today. I had a theory, and so far my theory works. I was off on my timing just a bit, so I'm learning from that. Market cap at 133 billion. Bitcoin dominance is down 52.8%, which means that most of the money that went into the altcoins, because Bitcoin was up to almost 54%. 24-hour performers, top performers, Odin, Dex, Gyra, Linkey, Digitex, let's see, status, Steam, Ethereum. You see that? 13%. There's a reason why I'm excited about that. I'm going to show you why in a moment. Bancor, Walton Coin, a lot of coins in the double digits. What about the worst performers? Tenex, Theta, Bitcoin Cash is down 2%. Bitcoin SV is down 1%. Dash is down negative 9.5%. That excites me. And I'm going to tell you why in a second again, why I'm excited by that. All right. Let me show you what I did. In the past, I have been, you know what? I'm going to save that. I'm going to talk about that. I'm going to do a separate Facebook Live tonight in our members only area. I said I was going to separate these two. Let's get right into the market. You got to be, because like I said, I found a strategy that worked. So you got to be a member of KGX to get that information, private information. Let's look at the market, some news right now. NASDAQ closing in on a bear market from stocks to Bitcoin. You know that we're looking at the worst December in history, or modern day history when it comes to the stock market. Since the 20s, the worst. We just had the worst performing week in 30 or 40 something years for the stock market. So don't be thinking that, oh, it's just crypto. No. Crypto's nothing compared to what happened in the stock market. Put this link in the chat box. As the NASDAQ Composite Index continued to approach a bear market, United States stocks sharply declined. Since the recession in 2009, this is the first time the NASDAQ has flirted with bear market type conditions. Bear market trends. NASDAQ isn't the only index feeling the pain of the market's downward trend. Nearly all of Wall Street's major players experienced deep losses on Thursday, which continues a week-long streak that has the market on the brink of unraveling after a 10-year bull run. Similarly, the Dow Jones, wait. Have you guys experienced 10 years of prosperity? I'm just curious. Since the 2008 financial collapse, NASDAQ says the market has been on a 10-year bull run. What about you guys and in your lives? Have you experienced a 10-year bull run? Or are you still recovering from what happened in 2008? Similarly, the Dow Jones, and the reason why I say that is, you see where life is right now after a 10-year bull run. What do you think life is going to be like if we go into a 10-year bearish run? Similarly, the Dow Jones Industrial Average dropped over 400 points, coming close to a 2018 low. The S&P 500 index dropped down to 2,466.84, which is a 1.6% decrease. This is on track for its lowest point in the past 15 months. Out of the 11 primary sectors, then 10 of them aided in the sell-off, leading the way where information, technology, and consumer discretionary shares. The lone gainer on Thursday was the utility sector, which many view as a defensive maneuver. Also contributing to the NASDAQ Composite Index closing in on a bear market was a continued downward trend in tech shares. The tech-heavy average dropped 1.7%, sitting at 6,524.53. This type of behavior is typically an indicator of an approaching bear market, which is typically defined when a decline of 20% or more occurs from the most recent peak. The VIX, also known as the CBOE Volatility Index, finished the day at 29. With this index, 20 symbolizes the historic mean, which is represented on a scale of 1 to 100. VIX typically trades at an inverse to the S&P 500. This means that sharp moves above the historic mean could potentially signal a fast approaching bear market for stocks. Downtrend factors. As NASDAQ continues to trend on near bear market territory, there are indicators that a shift might be taking place. This comes after Wall Street realized huge gains in the third quarter that saw many records broken. A deflating tech sector, volatile trade risks, and the slowdown of global growth are all contributing factors to the current downtrend we're seeing in stocks. Another contributor towards the potential bear market is the miscalculation of the Federal Reserve's forward guidance on monetary policy by investors. Many projected a fourth rate hike, where investors anticipated a larger downward revision. Instead of 4, the Fed lowered its projection down to 2, which is more than what many analysts were predicting. Bitcoin resurgence. If the market continues to drop, some predict that investors will scramble for a place to make that money back. They'll look for somewhere that has already hit rock bottom and might bounce back up. Could Bitcoin be that place? The risk of losing money is greatly diminished since it has hit its perceived low. Speculators suggest that when the Feds raise interest rates, the market will suffer, as will the US dollar and the gold standard. As a result, investors will look to leave stock markets and look toward cryptocurrencies, chiefly of which could be Bitcoin. Now that will be the first, because traditionally, people would think if the stock market would go down, the Bitcoin market would go up, and that hasn't happened. The crypto market has always mirrored whatever happens in the stock market until now. Now they're saying when investors are realizing that the bull run of the stocks is over, that they're going to leave the stocks and look toward cryptocurrencies. That is a huge shift that's about to take place. Let's look at what Ron Paul, I'm about to say Rand Paul, his daddy. Ron Paul says, the Fed is dead. Now tax-free crypto. Let me put that here. What's going on, Tracy? You guys enjoy that training with Miss Diana Townsend earlier? I need to see the replay. I missed about half of it, the second half. We'll talk about that in a second here. Next up is Ron Paul, the Fed is dead. Now, you got to know Ron Paul's background. You know, he comes from the libertarian, anarchist, no government intervention type of group. The same type of people who are behind cryptography, which led to cryptocurrency. So Ron Paul, long-standing crypto advocate, has once again called for the abolition of the Federal Reserve after it raised the baseline interest rate 0.25%, bringing it to 2.5%. Ron Paul has been advocating the ills of a fiat currency for some time. His main gripe with it is that without proper backing from commodities, the fiat system is heading for inevitable depreciation into worthlessness. That's why he advocates pursuing a mixed economy of cryptocurrencies and currencies backed by precious metals. With currencies actually backed up by something, they will hold their value and we won't be headed for implosion under a mountain of national debt. Paul tweeted angrily on Wednesday about the Fed's decision to raise interest rates for the fourth consecutive time in 2018. The rise of 0.25% took the interest rate to 2.5%. On the matter, Paul said the Fed has no idea what rates should be, and that the Fed manipulates prices, distorts the economy, and makes decisions by looking at the data of a distorted economy. The Fed has no idea what rates should be. The Fed manipulates prices. Now, you talk about price manipulation. Always remember, the Fed is not the federal government. Most people don't realize that. They don't answer to the president. They're a separate agency. They're independent. They're private. So he's been calling for end of the Fed. And Donald Trump has been saying this for about a year. The one thing about that is the last president to talk like this was JFK. And he was close to doing exactly what Trump is talking about wanting to do. So this will be interesting to see how this plays out, because we know what happened to JFK. So Ron Paul saying in the Fed, Paul sees the Fed as an institution of central planning in the economy and accuses it of producing a world of delusions. Central planning was, of course, a core tenet of the Soviet-style command economies, which ran and failed using centrally dictated guidance from politicians. Whilst the Fed is theoretically less political than communist economies of the past, it is nevertheless an institution which does distort the pure nature of the market. In his tweet, Paul is photographed holding up a copy of his book entitled End the Fed, which was first published in 2009. The book, which was first released in the wake of the American subprime crisis, makes the argument that the Fed is irresponsible, ineffective, and unconstitutional for its methods, which it uses to keep the dollar afloat, and I agree. The only reason why our economy has not died a natural death like it should have, or forced our government to be more responsible because it was about to die, is the Fed has been propping things up. temporary fix to a long-term problem, and you can only do that for so long. And the longer you continue to do this, the worse the fall is going to be. In Paul's view, the Fed is running on the same playbook as the Weimar Republic in interwar Germany or Zimbabwe. Both of these countries suffered under the extreme effects of hyperinflation, which is also currently happening in Venezuela. Paul believes the dollar, on its current trajectory, is heading for an inflationary depression, which will leave it worthless. Since the dollar is the world's reserve currency, this would be disastrous for the global economy. That's another reason why, besides the other countries of the world wanting to get away from the US dollar to avoid sanctions, our allies are also want to get away from the US dollar to avoid this disaster from the global economy when the dollar collapses. From skeptic to advocate, Paul has long advocated a switch back to commodity-backed currency like the gold standard, which ended in 1971. However, when he first encountered Bitcoin, he was skeptical. So he says in 2017, a wealthy person wants to gift you $10,000. You get to choose in which form you'll take the gift, but there's a catch. You must keep the gift in the form that you choose, and you can't touch it for 10 years. In which form would you take the gift? 2% Federal Reserve, 36% gold, 54% Bitcoin, 8% 10-year U.S. Treasury bond. I would choose Bitcoin, doggone it. Bitcoin is very exciting, but investors don't have a long-term perspective, he said in December 2017. Following the results of a Twitter survey he set up, asking people what they would do with the $10,000 if they received it today, clearly to his surprise, more people said they would invest in Bitcoin than gold. What's Bitcoin going to be like in 10 years? Nobody knows. But we have a pretty good idea of where gold will be in a general sense. That's true. He's absolutely right. But Bitcoin's only 10 years old. He has since got fully behind crypto and is now known as one of the staunchest advocates from American politics, seeing a coexistence for gold and crypto in the future. I agree with that. One is not going to remove the other. It is difficult to know if Paul is correct. Bitcoin is often dubbed digital gold and could offer a solution through its utility and mobility that gold inherently lacks. I can move a Bitcoin far easier than I can a gold bar. However, we must remember that the gold standard failed. It comes with the rigidity of value that makes it difficult for dynamic economies to reach their full potential. On the other hand, rising national debt cannot go on forever and will one day come to bite us. My advice, obviously not actual financial advice, spread your portfolio and get a bit of everything, and I agree with that. I agree with that. All right, let's go on to the last article, and then we're going to be flipping to, I'm going to be doing a Facebook Live in our private KGX community group only to show you guys some results of some trading that I was doing. Hello, and Barbara from Vallejo, Andy, Darnell from OKC, Justice from Puerto Rico. Crypto trends for 2019. All right, so what can we expect as we come in on 2019? The year 2018 is a turbulent year for all cryptocurrency holders. The price is down over 80% from the highs at the end of last year. However, the fundamentals have never been stronger, even though the price is falling. 2019 is closing in, and what can we expect from next year, and what are the major trends? During 2017, the cryptocurrency market exploded, and the altcoins and utility tokens emerged on a large scale. It did not matter what investors bought because most of the cryptocurrencies went up thousands of percent in price. The media started to write about the market, and fear of missing out drove millions of retail investors into the crypto world. See, Whenever Bitcoin is doing well, the media is like, yeah, get in on it. When a market correction happens, they're telling everybody to start bailing. These people had no education about crypto, had no idea what to do when a normal correction takes place. During the end of 2017, the market took off and the total market cap reached $830 billion and Bitcoin reached $20,000 per coin. That's that spike. When this is going on long enough, give it another 40, 50 years, and you're going to see the ups and downs. And then you look at this chart over a 40-year period, it's going to look like a heartbeat. When you're at the hospital and they hook you up to the machine. Dee, 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 dee. That's what it looks like. However, 2018 is a very different story. The market fell from the all-time high levels of $830 billion to $100 billion, a fall of 87%. How is it possible? And what has driven the market lower? Manipulation. There, done. Article done. First of all, everything that comes up also comes down. True. Markets move in cycles, and a move up of thousands of percent is not healthy. Spencer Bogart, an executive at Blockchain Capital, said that everything that goes up tends to go up a bit too much. The opposite is also true. The market went up too much, and the infrastructure was not ready yet. False. False, false, false. The market did go up too much, but about the infrastructure not being ready yet, the infrastructure is not needed for the market price to go up. Let's make this point very clear. We are not talking about fiat currency here that a government is control of, that a bank is in control of. This is decentralized. It is peer-to-peer. It's eliminating the middleman. There's no need for the infrastructure for the people using Bitcoin. We're talking about institutional investors, the rich people. We're not comfortable yet because they want to bring in ETFs. They want to bring in futures. They want to bring in trillions of dollars, not just for the Bitcoin, but to back up companies bringing in blockchain technology. That's the infrastructure they're talking about. But that's my opinion. Regulators began watching the space and have started to create a regulatory framework around it. The infrastructure is improving. You got that right. 2008 has been a huge movement in the positive direction as far as infrastructure is concerned. And 2019 has a lot more in store of us that could turn the tide. Now, even then, here's what I believe. I think that we're still going to be in a bearish market for a little bit. I don't know how many more months. I think the real takeoff again for Bitcoin really is probably going to be 2020 or halfway into 2019. This is my own personal idea. 2020, almost because of necessity. Experts all around, even the Trump White House is saying and preparing for a recession for 2020. They haven't come straight out and said it, but they're planning for the re-election. And they know that how can we plan and get ready and strategize to have a re-election during a year that's going to be a recession year. A president hasn't done that since, I think, Jimmy Carter. Anyways, retail investors drove the market during the last bull run, and many say that institutions might ignite the next. However, the institutions do not want to buy a Bitcoin at $20,000 per coin. Ding, ding. That's right. That's why they manipulated it all the way down. They want to buy at the lowest price possible, and the big players will most likely enter the market in 2019. Therefore, the market might see one last capitulation where the money goes from weak hands to strong hands, aka the institutions. Let me give that to you in layman's terms. When the market went up to $20,000 per coin, it wasn't the institutions, it wasn't the rich people, it wasn't Wall Street who was in on it. It was retail, aka all the broke and poor people got rich. And then the rich people said, whoa, they figured something out over there. If they can get it that high, what do you think we can do? So they came in, forced the market back down. They basically hit reset on Bitcoin. They hit the reset button. In the process, They shook the hands of all the retail people who had no education, no knowledge, not that much money, where the money that they invested is hurting them. All they saw was their wealth drop. And because of being scared, they sold because they thought they're going to lose everything. And who bought up all the coins that they sold? The rich people. And while they built their infrastructure, then they're going to let it go back high again. Only this time, it ain't going to be the retail people making the money. We just got a taste. It's going to be the people who have always been wealthy. Except those of you that are educated and doing something about it right now. Trend 1, institutions will enter the market. Institutions that are entering the market are no less than TD Ameritrade with its 11 million clients and Fidelity with its 25 million customers. Wow. At the moment, there are only 5 million active Bitcoin wallets. Imagine what 36 million customers from 2 of the world's largest institutions will do. You guys picture that? It's a classic supply and demand. That is not all. Intercontinental Exchange, the owner of New York Stock Exchange, will launch their platform Bakkt during 2019 in collaboration with Microsoft and Starbucks to spur mass adoption. The stock exchanges Nasdaq and Börse Stuttgart, the second largest exchange in Germany, will start to offer crypto-related products and trading platforms. If institutions and exchanges bring a few % of their customers into the cryptocurrency market, this could indeed initiate the next crypto bull run and create FOMO, fear of missing out, once again. Custodial services. However, institutions are waiting for a safe environment to enter the cryptocurrency world. They are waiting for custodial services to be created. Many big players are working on such services to help institutions to enter. One of them is BlackRock, who currently manage a modest amount of 6.28 trillion. That's modest. The crypto market cap is just over 100 billion. They think that 6.82 trillion is a modest amount. They are not alone. The world's biggest cryptocurrency exchange, Coinbase and Goldman Sachs, are other examples that are working on similar products. We are not there yet, but the infrastructure is being built in front of our eyes. ETFs, exchange trade products. Another factor that will bring institutions and other investors into the market is through an exchange traded fund. Many have tried to launch such a product, but no one has gotten it approved yet. The Winklevoss twins, among others, failed because the SEC argued that it was not safe enough for investors. The status now is that ETFs are postponed, and the SEC might approve it during 2019. The SEC is reviewing the ETF by the investment firm Van Eck and blockchain company SolidX on the Chicago Board Exchange, the CBOE. This ETF is one of the biggest chance of success due to the CBOE's relationship with the SEC. That's supposed to happen sometime first quarter next year. Trend 2, regulation and the emergence of security tokens. An ICO is a way for startups to raise money and global crowdfunding. However, most of the companies created through an ICO during 2017 will fail because they run out of money or because no one will use their coins or tokens. Another factor is the Security and Exchange Commission and regulation. Almost all the ICOs created utility tokens. Many of them did not follow the regulatory framework, and the SEC is now going after them. Even though they are going after ICOs, they are not against ICOs. The Commissioner Jay Clayton even said that ICOs are a great way of raising capital if the startups follow the regulatory framework. Startups and companies are now looking into other ways of raising capital. Instead of creating a utility token, many new companies are creating security tokens. A security token, and I'm not too familiar with that. Let's see, I'm gonna learn something new. A security token is in reality a share of the company. A utility token, on the other hand, is nothing more than a piece used in a company's ecosystem. Many argue that security tokens will be the future and breakthrough during 2019. Even NASDAQ wrote, if 2017 marked the emergence of ICOs and 2018 has been the year of regulatory uncertainty around those ICOs, that 2019 will belong to the security token. In other words, it's like a stock option. So far, security token offerings make up only a relatively small percentage of ICOs, but that will soon change. Security tokens, not utility tokens, will attract significant amounts of Wall Street money next year. Okay, now that makes sense. See, a utility token, you could take that sucker and start trading it on the exchanges. The security token's value is by selling it to someone who wants to own a share like stock within that one company. That's what I've been actually looking for. One of the reasons why I do go to these blockchain expos and stuff is not because I'm trying to learn more about Bitcoin. I'm more curious about the companies that are creating projects in the crypto and the blockchain space so that I can invest. And I'm not talking 5,000, 10,000, maybe 100, 200, $300,000 in. You got to think back and think big. What if you had invested $100,000 in Amazon in 1998? What if you had put $200,000 in Microsoft in 1979? I'm thinking big here, billionaire status. Billionaire status is not going to come from buying and holding cryptos. Billionaire status is not going to come from trading cryptos on the exchange. Billionaire status comes from investing in companies that's able to grow from a $30 million company to a $5 billion company. And you invested in it. That's next level stuff. That's where my head is at right now. So when I look at it, and people got to hear me when I say things like KGX in the vehicle, KGX is a vehicle, not the end all be all, but it is a means to an end. It is a way to raise as much funds as possible that you can then turn around and use those funds to flip into bigger investments while at the same time accomplishing our goal and mission of bringing crypto awareness to the masses. That is my prime directive. That is my mission. That is also why I am able to stay focused and not jump on every Tom, Dick, and Harry company and product that comes out. Even if I'm going to make a lot of money off of it on the short term, my vision is bigger. And that can't happen when you're scattered. Anyways, let me finish. Trend 3, stable coins. Another trend that is under development is stable coins. A stable coin is a cryptocurrency that holds a stable value. The coin gets pegged to another stable asset, such as gold or the US dollar, for example. Unlike our traditional stable assets, a stable coin is global and not tied to a central bank. The masses are watching the crypto market but are not entering because of the volatility. Stable coins are the solution. You guys see the second half of this year, we saw a huge rise in the number of stable coins. Most of it's dominated by Tether. Now there's like 10 of them out there right now. Regarding the future of stablecoins, they can indeed drive adoption. The potential for stablecoins is huge in everything from crypto insurance to lending and saving means. Entrepreneurs also hope there can be room in the market for many successful stable coins. So in summary, what does 2019 have in store for us? All pieces are coming into place. If Bitcoin were seeing its last days, the major players mentioned would not be entering the market like they are. The market is giving us a second chance to enter at low prices. It would be worrying if the market were falling and that no development would occur. Then there would be a reason. Now, however, the market is growing every day, just like the internet we use today. The blockchain and cryptocurrencies will most likely have a big part in all of our futures. Yeah, that's true. Bear this in mind. The internet we use today is not the internet that was created during the 90s. Also, that's another reason why I go to these blockchain stuff. The crypto space that you see today, the exchanges, the way the game is being played is not the way it's going to be in 5 years. There's technology that's already out that makes the blockchain as it currently is look like AOL dial-up to the internet. It's already there. But at least we are here at the beginning and we're able to ride this rocket that will take off. It's not even that the rocket's being fueled.
the fuel's already in the rocket. They're just waiting to push the button to take off. That's where we're at right now. So that is it for Late Night Crypto Talk. I'm going to be switching gears as soon as I end this. I'm going to do an impromptu Facebook Live in our private KGX community only group. So you got to be a member of KGX, because I want to share. I finished a whole full week of trading last week, meaning I was executing a trade at least once a day. And I figured a new strategy was not. I've always known it. I just executed it. Another strategy that what do you do in cases when you're not able to look at the market all day long, and you go ahead and you place your buy or sell orders, and you end up in a position where you do a buy order and then the market kind of tanks on you. So you can decide to either sell for a loss to get back in to recoup that, or you can do something else. So I've always known this, but it's the first time in my trading that I actually put it into practice, and it actually worked. So as soon as we hang this up, keep an eye on our Facebook Live in our KGX community only group. Send messages out to your team, because this is impromptu, not scheduled. And it's in our Facebook group, so it'll be recorded. So those that miss it will be able to go back and see it. So with that, thank you guys for joining in. I'll be back tomorrow morning for early morning crypto talk. I will no longer be showing trades that I do on an open mic like YouTube Live or Facebook. I'm saving those just in the community only for several reasons. Number one, I'm not a licensed financial advisor to be giving advice, and I don't want to run into any gray areas. And it's just another thing that we do for our community. So with that, you guys have a great day or evening, and I'll see those of you in KGX in a couple of moments. And if you're not a part of KGX, send myself or whoever's showing you this let them know that you want to be a part of our community. It's going to cost you $300. All right, guys, have a great day. God bless. Bye-bye.